Palo Alto Networks. Palo Alto shares surging about 12% this morning, and that's after that better than expected earnings report after the bell Friday, or at least the forecast calmed investors. Shares of the company actually initially fell when Palo Alto announced the unusual timing of the report, that is after the close on a Friday. Wall Street braced for the worst. The bad news never came, or at least it wasn't as bad as it was estimated. The company announced a bullish guidance for the longer term. Paul, what do you make of the Palo Alto situation? I mean, the company sort of said, we didn't maybe make the best decision with the timing of the release, but I guess that set them up to beat expectations on the flip side.
Yeah, the weirdest thing of all time to have not only a quarterly conference call, but then an analyst meeting that went on for several hours on a Friday night. Usually that is a harbinger of really bad news, right? You get the bad news out of the way on Friday so you can kind of dull the pain before Monday. And so the quarter was definitely mixed, but they also gave 3-year guidance that was pretty bullish. And I'm particularly impressed that they're going to continue to grow their revenues, or should. They're guiding to 17 to 19% per year over the next 3 years. Their RPO, which is revenue performance obligation, probably a more comprehensive measure of future revenues, probably compounds at 25. And the real upside surprise, I thought, was the operating margin and the free cash flow margin. Free cash flow margin pretty close to 40%, and it will come down a little bit, but it's not going to come down much. So, hey, the stock went from 260 to 206. It's going to open today at 236. That's probably still too expensive because you don't want to buy a stock up 12% on the session. But if you're going to own one play long-term in cybersecurity, this is probably the one.
Well, I wanted to ask you about that also, Paul. What does this report tell us about cybersecurity spending in what has been a more austere environment when it comes to tech spending? Or is it just that sort of Palo Alto stands out from the pack, so we can't necessarily draw bigger conclusions?
A key takeaway is that cybersecurity will still be designated spend. It still will be high priority spend. But here's the rub. And even Palo Alto Networks talked about this Friday night. Because the cost of capital, the cost of borrow for its customers is high and getting higher. They are buying the product, they're buying the services, but they're opting for deferred payment plans. And so we have to keep an eye on this, because even though you want to spend on something, if you can't, you could be in trouble. So that is why the company is pushing for this RPO metric instead of following the revenue metric, because the RPO captures not only invoice sales, but soon to be invoice sales. But yes, the higher cost of capital is starting to impact not necessarily the budget, but the pace of spending that budget, even though cybersecurity products and services will still be highlighted.
Yeah, that's a really important call out, and harkens back to the conversation we were just having with Max Wasserman, where he said that cost of capital is something to watch as it percolates through to a lot of different areas, including consumer spending.
That's right.
One other thing I wanted to ask you about to do with Palo Alto is Nikesh Arora, the CEO, talking about the need to really shorten time horizons, not of the payments, but of their work, of getting on top of cybersecurity breaches more quickly. Is that something that is going to necessitate more spending on the part of Palo Alto and its peers?
Well, I think what happens with Palo Alto, not only did they spend heavily on R&D, but it's an acquisitive company. So if they see emerging cybersecurity threats and better opportunities through M&A to come up with solutions, I think they'll continue to do that. They have a very strong balance sheet, a lot of flexibility. But oh yeah, we are in a very scary market, and the bad guys are always faster than the good guys. So yes, expect everybody to continue to scramble. But it seems to me with their product and software portfolio that among the players in cybersecurity, not everybody is a all-in-one solution, but this is about as close as it gets. And so if I'm going to invest in this space within technology, I'd probably stick with this one.